Hi everyone, thank you very much for joining us on this episode of Startup Talks. I believe this is episode 43, and I'm joined today by Philip Johnston. Philip is the co founder and co CEO of Opontia, the e-commerce acquisition platform, if I should say so, right? That is actually helping brands move on and grow globally. I'll leave the best bits of Opontia to Philip to talk about, but just to start the conversation, Philip, thank you very much for joining us. How are you doing, my friend?
Thanks very much for having me, Timur. I'm doing well.
Okay,
Uh,
that's great. It's actually, I think you must be excited about doing this during COVID.
so actually doing it during COVID, I always think it's very hard for us, but it means it's hard for our competitors too.
Great.
That's how I keep positive about it.
All right. So, Philip, I was looking at your profile. You really like learning. I mean, you started off with Nottingham, then went to Columbia, then to Wharton, then to Harvard. You've done masters in God knows so many different fields. Aren't you in the wrong line of work? You should be in ed tech or something.
Or maybe I should have done a PhD.
So,
Yeah.
so what got on to what brought you to Opontia? What's Opontia all about then?
Yes. Well, so just to address the education part,
Yeah,
because I agree that's
yeah.
maybe slightly too much education at some point.
No, it's good
So
at
no,
some
I did a 3-year undergrad in math, and in the US, I think you do normally 4 years for undergrad. So I thought, I'll go to the US and I'll do a 1-year master's in math.
point.
So I consider that to be kind of like a 4-year undergrad. And then for the last two, it was like a dual degree. So
Hmm.
if you apply to both Wharton and Harvard
Hmm.
for the Kennedy School, the MPA program, and for Wharton, the MBA program, instead of taking 4 years, you can do a dual degree. So you do it in 3 years and you just combine the middle year.
Hmm.
So I thought it sounded like a good deal. So, so I decided to do that.
No, it's good. It's
Um,
something to be jealous of. I'm jealous of you. You got so much. Anyways, please.
so yeah, so what brought me to Ponte really was I'd been doing venture capital in South Africa and Kenya,
Hmm.
and I saw that we would often get applications from e-commerce brands, um, and very passionate founders with great ideas that were making money, that I could see the potential for them to expand. It just wasn't in the sort of VC model to fund them, if you see what I mean.
Hmm.
So the VC model requires sort of a tech platform enablement so that it can scale extremely rapidly.
Hmm.
Um, a brand like a kitchenware brand, for example,
Hmm.
it just doesn't really lend itself for the return profile that a VC fund looks for.
Hmm.
And so we would see tons and tons of entrepreneurs who'd reached a sort of ceiling in how far they could grow.
Hmm.
And that the brand had big potential to expand,
Yeah.
but they just didn't have the operational expertise, they didn't have the working capital and all the rest of it to make it expand.
Hmm.
So we saw there was a big gap in the market for this like niche funding spot. So many entrepreneurs were looking for an exit as well, and there was nobody else out there, willing to take on the risk of a e-commerce brand.
Hmm.
So it was really founded with the sort of the the sellers in mind, basically. So it's founded to give sellers both an exit opportunity for their brands now, as well as enable them to participate in the growth of the brand as we grow it. So when we buy a brand, we inject, all of these different growth levers we try and pull. So we give working capital, we expand geographically, we expand the product line, we expand on different channels, we do all this digital marketing piece. Um, and then once we've grown the brand, then we give the founder some share in that growth and the profit as well.
Hmm.
So yeah, that was really the idea behind it. It was to sort of fulfill a need in the funding gap where entrepreneurs were getting a bit stuck.
Okay, so it sounds interesting. You actually, what got my ears ringing was that you guys only started earlier this year, and back in June, I think you guys raised $20 million, and just now you raised again 42. So you've got quite a bit of funding, and just it hasn't even been a year, isn't it? Right?
Yeah.
You've gone over 62 million. So what plans do you have? I mean, you're growing exponentially, I believe. How many brands do you have in your portfolio then?
Yeah. Well, I'll just say something about the funding because it's slightly misleading the headline numbers,
Mm-hmm.
um, which is that about just under half is equity and the rest is in the form of venture debt.
Mm-hmm.
And it's quite common in this model to announce the equity and the debt together because the debt warrants are linked to the Series A equity price.
Yeah.
So they can be viewed as the same round.
Mm-hmm.
But it's a bit unfair to compare us to other Series A rounds where there's not venture debt going in because that inflates the numbers slightly.
Uh-huh.
Um, so, but yeah, I mean, even still, we're still raising at a very rapid pace, and so that's one thing. One is that there's debt, and the second reason why it's a bit unfair to compare is some of the money, both equity and debt that we're raising,
Mm-hmm.
well, all of the debt and some of the equity is used to make acquisitions.
Mm-hmm.
So it's not like we're raising to build a tech stack or to hire, um, to hire a BD team.
Mm-hmm.
We're raising to acquire revenue, basically,
Mm-hmm.
which means that we grow much faster than a traditional startup.
Mm-hmm.
Um, yeah, and it's also kind of a safer
Mm-hmm.
VC style investment because
Mm-hmm.
it's not like we're trying to find product market fit. Like we're only buying brands that already have product market fit.
Okay.
Um, So yeah, so far we've bought four brands. We were just waiting for more for the latest raise to continue buying. We've signed 15 term sheets. We plan to buy another 15 in the next 3 months.
Mm-hmm.
We should have at least $30 million run rate revenue within the next 4 or 5 months.
Mm-hmm.
Um, yeah, that's the general aim.
Okay. And which markets are you concentrating in? Because e-commerce is a global phenomenon, and
Yeah,
it's the main driver of growth everywhere.
yeah. Yes. So we get asked this question a lot by our investors, or the question we get asked is, why are you doing Poland, Turkey, UAE, and Saudi? Because they sound like quite disparate markets,
Mm-hmm.
and there might seem like there's no method to the madness.
Mm-hmm.
But actually, to be honest, it's incredibly simple, the reason. So this model is being done to death in the US and in Western Europe and in South America and in Southeast Asia and in India. Um, we're targeting countries or we're targeting regions where there are no competitors currently doing this model of acquisition.
Mm-hmm.
So have you heard of this big company called Thrasio in the US?
Yeah. Yeah.
Yeah, yeah. Okay, so there's about 20 very well-funded competitors in the US and Europe doing it. So we're going Central and Eastern Europe, Middle East and Africa. The reason being nobody's there right now and there's big e-commerce markets.
Mm-hmm.
Then the next thing we look at is, okay, in those markets, which countries have the biggest e-commerce markets? And the biggest one is Poland, second biggest one is Turkey, third biggest is Saudi, fourth biggest is UAE.
Mm-hmm.
And then we say, okay, well, of these countries, which would it be the hardest for any of our competitors to enter? So which have the biggest moat?
Mm-hmm.
And honestly, the thing that makes it the hardest is where does Amazon not have a big presence?
Yeah.
And actually, it turns out in all four countries, Amazon doesn't really have a very big presence. So in Poland, the biggest platform is Allegro. Amazon has like 2% market share.
Mm-hmm.
In Turkey, it's Hepsiburada and Trendyol are the two big platforms.
Mm-hmm.
Amazon has less than 10%.
Mm-hmm.
In Saudi and UAE, it's Noon, Carrefour, Mum's World, Shopify, Salah, Zid. Um, Amazon has about 20% market share.
Mm-hmm.
So if we can build a very strong operational ground game in these countries,
Mm-hmm.
then we have an extremely strong moat around our business. Whereas if we were to immediately, for example, try start buying brands in Germany,
Mm-hmm.
we don't have any advantage there.
Okay. Now, I'm going to actually come back to this topic a little while later, but just to understand for the audience, because a lot of people from Pakistan are also going to be watching this. Um, E-commerce is taking off. I mean, it's of course a global phenomena that it's provided opportunities and it's grown exponentially world over. But in emerging markets, especially in Southeast Asian markets, it's growing at a much more accelerated pace. You guys know more of the stats than I do. So, coming down to the technical operations of Opontia, first of all, just to get a better understanding for myself too. So, what do you guys do? Do you guys acquire the company and then you run the whole operations of the company, like logistics and marketing
Yes.
um, team
Yes.
expansion and regional expansion? Is that a correct assumption?
Yes.
Okay, okay, that's great. So, since you're going into markets that don't have much of an Amazon presence, or to say it broadly, that markets where there is a lesser competition, right? Does Pakistan also fall under your ambit? Are you looking
Yes.
into Pakistan? Uh,
Yeah. So Duras in particular, there's two issues with doing Pakistan right now, and we will do Pakistan actually maybe sooner rather than maybe in the next month even. I might be in Karachi.
mhm,
But the two biggest issues are, number one, we get our, so when we make acquisitions, we use this venture debt facility to make them, and we're drawing from US based debt providers because they're the only ones that have enough experience in the model really to be comfortable with it.
mhm,
And the US debt providers are not super comfortable investing in Pakistan because of um, you know the close proximity to Afghanistan and
mhm,
historical reasons, which are probably not justified now. But
mhm,
um, yeah, so that's one thing, and the second thing is um, the the average basket size in Pakistan and consumer spending in general is just lower. Um, and so there's not enough big brands because the model only really works if you can buy big-ish brands. And I mean, by big, I mean not massive, but like, at least a couple of $1 million in revenue per year.
mhm,
And in terms of homegrown brands selling to Pakistani consumers,
mhm.
there's not that many of them yet.
Okay. Since you mentioned that you're looking at two of them, probably you might be in Karachi, I believe, sometime next month, right? If you are, I'm also based in Karachi, so I'd love to meet up for a cup of coffee with
Okay, I'd love to. Yeah,
you. Yeah.
that'd be awesome.
So, e-commerce, it's being promoted in Pakistan, more promoted in Pakistan rather than there is e-commerce activity within the country. And there are lots of players in the e-commerce space who are actually into it for the purpose of educating people on how e-commerce is done and how to sell on Amazon and everything. So there are quite a few people doing work on Amazon. Are those kinds of businesses also your target?
So again, which type of businesses? There's
The e-commerce
oh, I see.
businesses on Amazon and those kinds of marketplaces.
Yes, yeah, yeah, yeah.
Hmm. Okay.
But not in Amazon US. We only target brands that sell to Pakistani consumers or to consumers in our regions.
Okay.
Um, because the reason being is Thrasio will buy
Hmm.
those brands, and we don't really want to compete on operational expertise with Thrasio. And the reason I say operational expertise is because basically, if they can drive better performance than we can, then they can justify paying a higher price than we can.
Hmm.
So their offer will be higher than ours, basically, and that we don't want to have to compete on that.
Hmm. Now, coming to the core business of Apontia, say for example, if I have a e-commerce brand and it's doing something like $2-3 million in GMV every year, something like that. What advantage do I have of exiting to Opontia?
I mean, well, if you were based in UAE, Saudi, Poland, Turkey, then we would love to speak to you. And I think very, very high chance, to be honest.
Uh-huh.
Yeah.
So, if I do join hands with Opontia, right?
Yeah.
Obviously, I would still have some stake within the business. I would still be part of the operations, or do you
Actually,
buy them out outright?
so from a legal point of view, we buy outright, so we own the whole business, and we have to do that because of the terms of our debt facility. But
Mm-hmm,
then we give you some share in the growth in profit over the following few years.
mm-hmm,
So if we double and triple the profit, so for example, our first brand, Novimed,
mm-hmm,
we trebled the revenue in the first 3 months,
mm-hmm,
um, almost doubled the profit. So if we can double or triple the profit in the first couple of years, then we give you some share in that growth in profit, basically.
mm-hmm. And when you do acquire these brands, obviously the biggest attraction is expanding into other markets. So when you do the expansion of those brands into other markets, is that also in markets where you don't have competition from companies like Thrasio and all, and Amazon?
So right now we're expanding within our countries, but if we find a brand that can easily expand
Mm-hmm,
to Europe or the US, then that definitely makes sense. The problem is, like for example, our first brand, Novimed, which makes medical pillows,
mm-hmm,
they don't sell in Saudi and they sell in the UAE, so it's extremely easy for us to start selling in Saudi.
mm-hmm,
If we start trying to sell medical pillows in Europe and the US,
mm-hmm,
there's about 500 companies trying to sell medical pillows in Europe and the US.
mm-hmm,
So it's like we don't have any, there's no advantage for us doing that. If, for example, though, it's a local type product,
mm-hmm,
then it makes sense. So, for example, in Saudi, we might buy a prayer mats brand.
mm-hmm,
So um, there might be a market for Saudi prayer mats in Europe and the US.
mm-hmm,
That's something that it would make sense
mm-hmm.
to send out.
Okay.
Yeah.
So, uh, with all this, whether it's debt and equity, whatever the composition may be, what's the future like for Opontia? You guys are in the news quite often.
I mean, the future is very rapid growth right now, at least.
Mhm,
So yeah, sorry, we're going to buy, as I mentioned, we'll buy at least 10 in the next few months.
mhm,
We're going to double our team,
mhm,
double our headcount in the next 6 months. So from 50 to 100. We will then launch new countries, so Pakistan, Egypt,
mhm,
maybe even Russia at some point, depending on the situation with Ukraine, Nigeria, Morocco,
mhm.
Kenya, South Africa.
Okay,
Yeah.
okay, that's great. So, of course, you are on holiday right now. Christmas time is coming, and I'm also almost coming to an end of time through this platform. Would you like to convey a message or something to the audience about Opontia and people who might be trying to reach out to you?
And we're hiring very aggressively now in brand management and marketing, also operations, logistics, sourcing.
Mhm,
Um, but the biggest piece is driving traffic to Shopify sites. So
mhm,
anybody that is very experienced in digital marketing,
mhm,
particularly using influencers, would be very helpful
mhm,
in Saudi, UAE, Turkey, and Poland.
mhm.
We'd love to hear from them. Yeah.
Okay, so they can reach out to you directly.
Yes. Yeah. Feel free. Or careers@apontia.com.
Okay, okay, that's great. So, thank you very much, Philip, for joining me here in your health condition. I'm actually very grateful that you've given time here today. Hopefully, you get well soon, and your family is also safe from the situation, especially in the fast-going pandemic effects in the UK. So keep safe. Hopefully, when you're out of it and you're in Karachi next year, We should meet up for coffee or something and maybe dinner, and I'd love to have a chat about it and see how you're expanding into Pakistan then.
That would be great. Yeah.
Okay. Thank you very much for joining me. Thanks for this conversation. Have a
Thanks
great
so much,
day, sir.
Tamar.
Thank you. Bye bye.
Bye.